Okay, good morning, everyone. My name is Coach Waltz. I'm privileged to take you through a section that is very important this morning, which is on two tactics indicator, technical analysis, how to analyze the market. We call it two tactics indicator, Rqtmi two tactics indicator. But before I proceed, I would like to acknowledge my coaches, Coach Moore and Coach Salusin, for this privilege they've given to me once more to present to you guys the technical analysis for the day. For those of you who is every Fridays, where we teach you on how to analyze the crypto markets. And at the end of the day, if you are consistent with this class, you'll be able to do this on your own, effectively on your own. So today, we are going to be talking about technical analysis, and which we are going to be looking at the two tactics indicators. So what we mean by two tactics indicator is that when analyzing the crypto market, you make use of indicators. So there are a lot of indicators you can actually make use of. A lot of indicators you can actually make use of. Sorry, I'm trying to make the screen okay. There are a lot of indicators you can actually make use of, but we have streamlined our own indicator to just two effective indicators you can make use of. So we are going to be teaching this morning on how to make use of these two indicators effectively. How to make use of these two indicators effectively. That is what we are going to be talking about. Dollar Queen, is the screen brighter now? Coach Eunice, can you hear me? Is the screen brighter now? Can you see the screen?
Yeah, we can hear you, Coach. Can see it.
Please, I need a response from you guys immediately,
Yes,
please.
yes.
Now, so we are going to be making use of two indicators. And the two indicators we are going to be making use of this morning is known as the stochastic RSI and the auto Fibonacci retracement. This is the auto Fibonacci retracement. For those who cannot spell it or do not know how to pronounce it, it is known as auto Fib retracement. Then we have the stochastic RSI, which is the stochastic RSI. Please, if this is your first time of being on this call, I need first time on the chat so I can know my audience and I know how to present to you for you to get value from this section, please. If this is your first time of being here, I need first time. If this is your first time of being on this call, I need first time. Please give me some few minutes. Okay. Thank you. I can see we have some few numbers of persons. Thank you. You're welcome, King Samuel. You're welcome, King Inibisi. You're welcome, King Timothy. Queen Sandra, you're welcome. King Trao, you're welcome. So let me proceed. So as I was saying, we are going to be looking at these two important indicators. That is what we are going to be using to analyze the crypto market this morning. So I'll start with the stochastic RSI. It is important for you to understand the function of the stochastic RSI, when to use it, and how to use it. So we are going to be talking about it. Then the same way we talk about auto Fibonacci, how to use it, when to use it. Then after which we combine these two indicators to pick a trade perfectly. Take note, you cannot use one indicator to pick a trade perfectly. You need a combination of both the stochastic and the auto Fibonacci retracement to do that. So today, let's start talking about, because of time, I'll take you through. The stochastic RSI is known as the combination of these four lines. In a layman way, we call this the red line, the yellow line, the green line, and the blue line. But here, we call the red line the seller zone. This is the seller zone. We call the green line the buyer zone. We call the yellow line 50% sellers and 50% buyers. So what this thing means is the decision of sellers and buyers is at equilibrium at this point. So if I extend the line, this yellow line is at 50. So you have 50% seller and 50%. The activities around this region is at equilibrium. Why this blue line is known as the RSI. So if you are writing, it's important for you as a new member to jot these important information down. RSI is known as the relative strength index. It's known as relative strength index. Don't mind my writing. Now, what is the function of the RSI? It tells us from time to time who is in charge of the market. So whenever you see the blue line touching the green line, it tells you that the buyers are in charge. Whenever you see the blue line in between the yellow line, it tells you that the activities of the sellers and the buyer is at equilibrium. Then whenever you see this line, the blue line touching the red line, it tells you that sellers are in charge. Now, you cannot use the stochastic RSI without considering the different time frames. So if I take you from this point up to this point, you can see that we have different time frames. So currently, I am on the 1 day time frame. This chart is showing me the 1 day time frame. So I'm looking at the stochastic on the 1 day time frame. So you make use of stochastic RSI alongside with these different time frames. Alongside with different time frames. Take note of that, please. Now, having said this, I won't identify stochastic RSI for you. And I've explained the different combinations. So the combination of all these four lines is what is known as stochastic RSI. Your blue line alone is known as your RSI. The green line is known as the buyer zone. Red line is the seller zone, while the yellow line is 50% buyers and 50% sellers. Decision is at equilibrium. I hope that is clear. So how do we now make use of stochastic RSI? We make use of stochastic RSI along the different time frames. Now, today's topic will be a bit different, but it is still the same. For those people who are old on this call, it is still the same conditions we are going to be using. So I'm not going to be talking about short entry, long entry today. I'm going to be introducing a new tactics to you people. Now, I'm going to be considering these new tactics, but I'm also going to be using the condition for short entry, shorter time frame rather, and long time frame. So we are not looking at long entry or short entry. I'm just looking at the condition for short time frame and long time frame. So please, for those people who are new on this call, if you want to understand what short entry, long entry, and pro strategy is, you can visit our YouTube channel where you can get a hold of those topics I have treated earlier. So Dollar Queen or anybody, do send our YouTube channel for them. Let them go on their own time to study about short entry, long entry, and pro strategy. Now, under this long entry, short entry, we have what is called short time frame and long time frame. So I'm just only going to be talking about short time frame and long time frame because I'm not discussing about short entry and long entry. But under short entry and long entry, that is where we talk about short time frame and long time frame. Take note of that. But I'm just only interested in long time frame and short time frame. I'm not talking about short entry and long entry. Now, for those who are new, we have conditions for short entry, for short time frame rather, using the stochastic RSI. We have conditions for short time frame. Now, there are three conditions, and I will be giving you guys the three conditions. Now, the first condition says that your RSI, which is this blue line, must be touching the green line. Like at this point now, you're seeing that the RSI, which is the blue line, is touching the green line on a short time frame. So it is touching the green line. That is the first condition. RSI is touching the green line. If I were you, I'll write this information down. Touching the green line, which is the buyer zone, the green line. Second condition is I want to see my RSI between 0 and 20. Between 0 and 20. So in this case, I'm looking at 0 and 20. So my RSI is between 0 and 20. So let me show you guys that it is between 0 and 20 here. Now, if I extend this up for you to see, look at my right-hand side. You see the numbers here. I'm just trying to extend it. Now, we have 0 here. Look at 0. And we have 20 here. So we are saying the RSI, from the tip of the RSI, look at the tip. If I project it down to this point, you see that your RSI is currently at 6.46. So the second condition is that your RSI must be between 0 and 20. Then your third condition is, the third condition is that your RSI should be pointing up. In this case, it's not pointing up, but let me show you an illustration of what I meant by should be pointing up. If you have it in this case, okay, let's say you have it in this case, still not pointing up enough. Okay. Now, in this case, you see your RSI is pointing up. The top condition says that your RSI should be pointing up and must be between 0 and 25. 0 and 25. Now, it is pointing up. Look at it. It's pointing up like this. 0 is there, and 25 is somewhere between 30. Look at 25 is somewhere between 30 and 20. So you see that your RSI is pointing up and it's between 0 and 25. Currently is at 6.03. So these are the three conditions you want to see on a short time frame, please. On a short time frame, please. These are the three conditions you want to see on a short time frame. Now, when I mean on a short time frame, because today's topic is going to be very interesting, it's different from what we have been teaching. The short time frame we are looking at is 15 minutes time frame. This 15 minutes time frame. And the long time frame or confirmation. So we have short time frame, and we have long time frame, or we call it confirmation time frame. Now, the long time frame we are going to be looking at is the 1 day time frame. So for this 15 minutes, which is my short time frame, I just gave you the three conditions I am looking at the short time frame, which I said the first one is that the RSI should be touching the buyer zone, which is the green line. The second one, or the 15 minutes you want to see, is that the RSI should be between 0 and 20. On the 15 minutes again, which is the short time frame, what you want to see, the last thing you want to see is it should be pointing up and must be between 0 and 25. I will say that it is not compulsory that the three conditions must be met on the short time frame, or on the want to see is at least one or two of these conditions should be met. So at least if you see it between 0 and 20, it means that for it to be between 0 and 20, it means that it is touching the green line, meaning you have already seen the first condition. So at least you want to see the RSI on a shorter time frame between 0 and 20. So on the 15 minutes, we want to see the RSI between 0 and 20. Now, on the longer time frame, which is the 1 day. So if I go to the 1 day, on the 1 day, we are not going to make use of the stochastic RSI at all. For what I am teaching today, please take note of that. We are not going to make use of the stochastic RSI on the 1 day. Neither are we going to make use of the auto Fibonacci on the 1 day. What we are going to make use of is the candle. Now, for the candle, I just want to see the current candle on the 1 day, which is my longer time frame. I just want to see the current candle to be bullish candle. Now, when you see a red candle means bearish. Sellers are selling, bearish. You have sellers are in charge. But when you see a green candle, it means that buyers are in charge. So on the 1 day, what I'm looking out for is a green candle. That is what I'm looking out for, a green candle. Take note of that, please. I'm looking out for a green candle. Take note of that on the 1 day. So I will say that today's topic is going to be very unique. If you really want to understand what we have been doing before now, go through our short entry, long entry, and post strategy. We have the video. I explained everything so explicit that you can understand. For those who are old on this call, knows what I'm doing, already know most of the things I'm doing. It's just that we just have a little new update that I'm trying to introduce to you people. Now, in crypto, we have time zones where there's liquidity in the market. Liquidity is very high in the market. When we mean by liquidity, it is either people are injecting money into the market and people are injecting money out of the market. So you need to take advantage of that period and you will enter the trade and take your own share from the market. And that is the time we want to talk about. You need to know that time, that particular time to trade. You don't trade every time. There are specific times you trade. Those are the times you have liquidity into the market. You can enter into a trade and come out of the trade faster. And your floating loss will be very minimized. So that is what we want to talk. So we have what is called the Asian combat areas. The Asian combat areas. My mouse is doubling. We have the Asian combat area. We have the London combat area. And we have the New York combat area. We have the New York combat area. Now, we don't consider the Asian combat area because this trade takes place around between 2 a.m. to 6 a.m. in the morning. Most of us, we are sleeping already. This is when the people in Asia countries enter into the market. So, but what we consider is these two combat areas, the London combat area and the New York combat area. The London combat area is when people in UK enters into the market, and their time is between 8 a.m. to 11 a.m. in the morning. The next time again is people in New York, US, New York, when they enter the market is between 1 p.m. to 4 p.m. in the evening. So these are the combat areas that you have the most liquidity. You can take advantage, come out of the trade very fast. So we are going to teach you how to trade within this combat area using indicator. So that is what I want to establish today. So we are going to be doing back testing on some of these coins, and we want to try these combat areas. Now, trying these combat areas, we are going to be making use of the 15 minutes as our shorter time frame. So 15 minutes is our short time frame, which happens to be our entering point. This is where we are going to enter the trade. Then 1 day is our longer time frame or confirmation time frame, which we are looking out for a bullish candle on that 1 day. So I hope this is clear. So I am going to do backtesting. For those of you who do not know what is backtesting, backtesting is simply trying to backtest previous day's trade and how the whole thing went. So you use it to practice to build confidence on yourself before you can now come into a live trade. So I'm going to do backtesting of some of these coins. You might have the opportunity to list your own coins you want me to backtest also. So having said that, in the 15 minutes, which happen to be our shorter time frame, I've given you 3 conditions that we want to see using the stochastic RSI. And I'm telling you that at least one of the conditions should be met. And that condition is that we want to see the RSI between 0 and 20. Then the next thing we'll do, we'll come and do a confirmation check to ensure that that day, on the 1 day, the current candle is a bullish candle. And that bullish candle, what is bullish candle? Bullish candle is green candles, while the bearish candle is the red candle. Take note of that, please. So let's proceed. Now, first of all, On the 1 day, which is my longer time frame, take note, I am not making use of any of the indicators. What I'm just doing, I just want to ensure that the current candle for that day is a bullish candle. So I'm backtesting. If you look at, I'm going back to previous days, what has happened. So now, let's assume I met the trade on the previous day on the 1 day here, and this is a bullish candle. Like I said, this is a bullish candle, like I said. So on the 1 day, the first thing I want to see is that it is a bullish candle on the 1 day. So now I want to see is a bullish candle on the 1 day. So let's mark which day was this in particular. Which day was this? I'll just put a vertical line on top here to mark this day. You guys will see is Thursday, 8th August. Thursday, 8th of August. On Thursday, 8th of August. So I'll come back to my 15 minutes. Look at it here. It's on my 15 minutes. Look at that very candle here. That is the very candle here. So now, because we are looking at the London time zone, take note, please. So the crypto market starts by 1 a.m. every day. Every day, 1 a.m. is a new day for the crypto market. So on the 1 day that I have marked this, Thursday, 8 August 24, it means it is a new day on that day for the crypto market. This is where the market started on Thursday. So because I went to a smaller time frame or a lower time frame, which is 15 minutes, it is showing me on the 15 minutes that this was the point that the market started from. Now, that is why you are seeing 1 a.m. So because I'm on the 15 minutes, each of these candle forms every 15 minutes. Each of these candle every 15 minutes. Because I'm on the 15 minutes. Now, because I am looking at trading at the London time zone, take note of that. I am stressing this emphatically that on the London time zone is between 8 a.m. to 11 a.m. Now, what you need to do is come and spot your 8 a.m. Still Thursday, you see Thursday, 8 a.m. is around here on this candle. Let me pick in this candle. This is 8 a.m. Look at the time here is 8 a.m. Then you come and spot another time here is 11. You are looking for 11:15. 11 o'clock. This is it. So because I'm backtesting, so before 8 a.m. in the morning, let's say around 7:45 or 7:45 thereabout or 7:30, you should be on your chart to wait for you to see what I want to explain. Now, if you look at, I have mapped out the London zone or the London combat area, 8 a.m. in the morning. Here, 7:15. I am waiting to see my setup. Now, this is where we are going to make use of the RSI. Now, but before I proceed, I forgot. I have explained how to use RSI, the condition. Now, for auto Fibonacci retracement, what is called auto Fibonacci? Auto Fibonacci is all these numbers you are seeing is known as the auto Fibonacci retracement, which is the second indicator we are going to be talking about. And the second indicator, what does auto Fibonacci helps you to do? It helps you to know when a particular time frame is an uptrend or a downtrend, when it is an uptrend or a downtrend. And for an uptrend, what do you want to see? How do you know it's an uptrend? For an uptrend, you want to see 100% at the bottom, 0% at the top is an uptrend. If you see 100% at the bottom, 0% at the top, this is an uptrend. To further confirm that this is an uptrend, you will see a diagonal line projecting from the bottom to the top, like in this case. This is the diagonal line. This further tells you that this is an uptrend. Take note of that. This further tells you that this is an uptrend. So in essence, the auto Fibonacci tells you if a particular trade on a particular time frame, like we are in the 15 minutes, is telling us is it an uptrend or a downtrend. So how do we know it's an uptrend? You want to see 100% at the bottom and 0% at the top. For a downtrend, let's see an example for a downtrend. Let's say we are on the 30 minutes down time frame. Good. For a 30 minutes time frame, let's look at the 30 minutes time frame. You see that we have, for the 30 minutes time frame, how do we know if it's an uptrend or a downtrend? Now, whenever you see 0% at the bottom and 100% at the top, this is a downtrend. It means it's a downtrend. Now, to further confirm, you see a diagonal line projecting from top to bottom. So in essence, what auto Fibonacci helps you to do, it helps you to know at what particular point or time frame a trade is an uptrend or is a downtrend. That is what auto Fibonacci helps you to do. I hope that is clearly understood. Now, remember when I started this session, we said that you cannot pick a trade perfectly where using one indicator. You need a combination of two or more indicators. So when you come to your one day, remember I said the one day you don't need indicator. All you need is you just want to know if the current candle is a bullish candle. That is what you want to see. So the next thing, you go to your 15 minutes. So we are making use of 15 minutes and 1 day. 15 minutes our entry. On the 15 minutes, what you want to see is, first, you are going to make use of your indicators on the 15 minutes. So what you want to see on your 1 day when you come first is you want to see your stochastic RSI and your auto Fibonacci on your chart first. Now, on your RSI, what you are looking for is at least any one of that three conditions I mentioned on the shorter time frame. At least if any one of those conditions, preferably you want to see your RSI you are looking at for. Two, you are waiting for this combat time zone, this combat area between 8 a.m. and 11 a.m. Now, between 8 a.m. and 11 a.m., you are looking at the position of the current candle. Now, you want to first know if it is an uptrend or a downtrend. Now, in this case, we are seeing that it is an uptrend because we have 100% at the bottom and 0% at the top. Like I said, come 30 minutes or 25 minutes or 45 minutes before 8 o'clock to know the trend and watch what is going to happen. So now, take note, I am back testing, so I'm going to control this with my hand. What do I want to see? I want to see my RSI, this green, this yellow line, this blue line touching between 0 and 20. Please take note of that. That is what I want to see. So let me control it with my hand so you guys can see the way it is going. Okay, so let me slow it down. I'm backtesting. Remember, I'm backtesting. Watch the green line, what is happening, and the blue line, what is happening, and watch the candles. So we are about entering into the combat area, which is 8 a.m. and 11 a.m. Okay, wow, wait, the thing went further. Let's take it slow. Now, take note, please. Now that you are on, immediately it touches the 8 o'clock line. The 8 o'clock line, please take note. Immediately it touches the 8 o'clock line, which is the 8 a.m. line. Immediately it touches the 8 a.m. line. So at this point is an uptrend. So where do we want to see the current candle? What do I refer to as the current candle? The current candle here. So for an up 11 a.m., we want to see the current candle on the 50% line, this 50% line, or anywhere below the 50% line. Please take note of that. We want to see the current below the 50% line. Take note of that. So let's see, and if you see the current candle, take note please, if you see the current candle on the 50% line, let's say this is the current candle, it means that at the same time your RSI should be between 0 and 20. That is what, so this RSI should be speaking the same language with this. So if the auto Fibonacci is an uptrend, if it's an uptrend, remember for an uptrend, we say 100% at the bottom, 0% at the top. So you want to see the current candle on this London time frame. You want to see the current candle either on the 50% line or anywhere below the 50% line. But if the current candle is at 50% line or anywhere below the 50% line, it means that your RSI should also be between 0 and 20. Take note of that. So that is what we want to establish. So I know why I'm explaining it now, because with the way it is going, I doubt if I will develop this from this chart. But I just said, let me explain first. We can look into another one if this did not give us what we want. So it's now on 8 a.m. So we are entering into the London combat area. Now, what we are looking for is an uptrend. We want to find the current candle on the 50% line, and also the RSI should be touching the green line. So let's see if we can see that. You see it's going up. It's going down. You see, now area 8 a.m. and 11 a.m. Now you see that the RSI is touching the green line. But our current candle is not, we have not seen our current candle on the 50% line or anywhere below the 50% line. So we are still going to be checking. See, you see, it's coming down. So we are still going to check. Now, if you watch, your RSI now is touching is between 0 and 20, which is currently at 7.39. But the current candle is yet to touch the 50% line, and we are almost going out of this combat area. So once we cannot achieve that, once you cannot achieve that within this combat area, meaning you have to let go of that trade at that particular point because you did not see the setup you are looking for. The setup is that since it's an uptrend, 100% at the bottom, 0% at the top, you are looking at the current candle to be on the 50% line or anywhere below the 50% line. And you are also looking at your RSI should be at that point between 0 and 20. So we are trying to see how we can establish that. So let me try. You see, we are out of that combat area. We are out of the combat area. So we did not see that particular setup. So if we are looking at our current candle to be on the 38.2% line, we would have seen a setup because our RSI is touching, our RSI at that point is touching, our RSI at that point is touching the 38.2% line. So let's try another one. Let's see if we can achieve. Can someone drop a coin? Let's check. Let's backtest it. I guess you guys now have the idea of what we are looking at for. Please, if you are understanding this section, I need the word clear on the chart. Please, we are backtesting. You see, I'm not. Okay, yes, we are going to check the next combat area, but let me see. Okay, let's check the next combat area. Let's check the next combat area, which is 1 p.m. to 4 p.m. to 4 p.m. to 4 p.m. So between 11 a.m. to 12, between 11 a.m. to 1 p.m. is like a resting time. It's like a resting period. It's like a resting period. So the next time you want to enter into a trade again to see a setup is on the 1 p.m. and 4 p.m. Of course, having it in mind that on your one day, the current candle is bullish. Having it in mind that on the one day, the current candle is still bullish. Take note of that. So let's proceed. So let's assume the resting period, we are going to the resting period between good. Now, we have come to the one day. Now, if you look at the current candle is let me change this from okay. Now, if you look at immediately we got to the one day, you see that the trend has changed. Now it is not giving me a bearish signal, a downtrend. Now, how do we know that this is a downtrend? Like I said, for a downtrend, you want to see the current candle. For a downtrend first, how to identify a downtrend? 0% at the bottom and 100% at the top. Then you see this diagonal line projecting from up to down. Now, for a downtrend, where do you want to see the current candle? You want to see the current candle on the 0% line. You want to see the current candle on the 0% line or anywhere below the 0% line. anywhere below the 0% line. So where is the 0% line? This is my 0% line. Let me just 0% line. This is the 0% line, or anywhere below the 0% line. So take note of that. Now, since we are seeing it as a downtrend, we are looking at our current candle. So between this New York combat area, which is 1 p.m. and 4 p.m., you want to see for a downtrend, since it's not a downtrend, you want to see the current candle on the 0% or anywhere below. But of course, it must align with the rules of the RSI. Where do you want to see your RSI? You want to see your RSI between 0 and 20. So currently it's at 8.26, and our current candle is on the 1 p.m. London time, so currently, which is close to the 0% line, but it's yet to touch the 0% line. So let's proceed further. Okay, now, before I did it too fast, now let's assume you saw it, your current candle now is, this is what we are looking for now. Please take note. Let's assume you saw this current candle. This is the current candle. This is your current candle. You saw it below the 0% line, which is perfect. We say for a downtrend, you want to see it on the 0% line or anywhere below the 0% line. Then the next thing you have to confirm what is your RSI. Your RSI is saying, speaking the same language, is between 0 and 20, which is currently at 4.26. So at this point, you are good to go. What you just need to do is come and take this as your entering price. Now, the current price of this candle, you will use horizontal line to indicate it. This is the current price of this candle. This is the current price of this candle. Is at 2.015, 2.015. This is the current price of this candle. All you need to do is, on this, once you map out your entering price, your current price becomes your entering price. But if you are sending signal to the signal group, you just leave little allowance because the price can come back for people who were not opportune. The reason why we give preset price on signal is because not everybody will meet that coin at a particular current price. So we leave allowance. So if I'm seeing this current price at 2.015, I will leave allowance of 2.013 because they have to enter into the trade too. But if you are lucky when we drop the trade, if you are not analyzing to send to a signal, you can pick it at the current price. Take note of that. You can pick it at the current price. So now we have mapped out our current price, which becomes our entry price. So the next thing we are going to do now is we want to take profit. Please take note. Do not take more than 3% take profit. 3% take profit, please. So do not take more than 3% take profit. So you can come out of the market as fast as possible. Remember, I told you that between this London time zone is high liquidity. The liquidity is in this London time zone. So you enter fast, you come out fast. People are pumping money, people are selling. So there's high liquidity. So if you learn the advanced way, which is the SMC, you will understand why we say you should not take more than 3%, because if you are doing SMC, you should know when people are about, or the SMC, which is the smart money guys, the big financial institutions, where they are about injecting money into the market and when they are about exiting the market. So you enter the same time they enter and you exit the same time they exit. That is what the SMC helps you to do. So that is like a PhD level. So it is based on that we are telling you don't take more than 3%. So we cannot start going into details to explain to you that because it will be a bit confusing. So just take 3%. This 3% becomes your exit point. You use your price range. Let me put in my price range. Let me still put in it for people. So this is my price range. That is what you use to take profit. Then you use another horizontal line to mark your exit point. So now let's mark when we took our entry, the time we entered into this trade. If you see the time we entered into this trade, this is 1:15, exactly 1:15. Remember on the 15 minutes, I told you that each candle forms every 15 minutes. If you are on the 5-minute time frame, candle forms every 5 minutes. If you are in the, take note of that. If you are on the 1-day time frame, each candle forms every 24 hours, 1 day. So that is that. So this was the time we entered into the market, which was 1:15 p.m. So I have taken my entering price, I've measured my exit price is 3%. So I want to come out when the price gets to 2.076. So I enter when the price is 2.015. So let me increase the bar replay so that it will go fast. So what I'm playing this, let's see when we are going to come out of the trade. So at this point, you are on a floating profit. At this point, you are on a floating profit. Now, at this point, you are on a floating profit. It came to some margin cost here. Then you are on a floating profit. Now, you see, you have exited the combat area, which is 4 o'clock. We are still going. You are on a floating profit. Floating profit. You are still on a floating profit. So good. So at this point, I'm going to pause it. So this is when you were able to come out of the trade. Let's check the time. So at this point was when you came out of the trade, and let's check the time. This was that same Thursday. You entered into the trade on Thursday 8th, August 24, 2024, as at 1:15 p.m. And you came out that same Thursday 8th as at 10:45 p.m. So that is how to analyze within that time frame. There's high liquidity. So what you notice there is that you notice that this trade hardly puts you on a floating loss. If you look at the time you were going to expect to, it didn't even buy more margin calls, because when it dropped at this point, this was the point it came below the price and it went up back again. So there was no time it came down to down. So if you trade within this time frame, it will reduce your floating loss. It will help you reduce your floating loss from experience. So we are telling you this because we have tested it, and over, we have tried it over and over again. So if you look at from 8 a.m., if you look at from 8 a.m. down to 4 p.m., you will see that the trade was always up. Like it did not come below our entering price. So what it tells you is that on this trade, you did not experience more floating loss before your trade went to sell. So that is the idea. Please, if this is clear, I need clear on the chart. Please let me know if this is clear. I need clear on the chart. If this what I've explained is clear. Okay, King Maduka Emmanuel said I should use now. Please, I need your response. If this is clear on this chart, I need your response, please. Only 3 people are responding clear. Among the new timers, if this is clear, I need clear on this chart, please. Okay, King Cyrus will say I should take it again. So I'm going to use another illustration by King Emmanuel said I should use cake. So let's look at cake and do it. So I hope you guys can still see my screen. Let's go to cake. Please, if you are new on this call, I advise you, if you are still new on Rqtmi, I advise you to try this strategy within the 25 volatile coins. Please take note of that. Within the 25 volatile coins. So King Mohammed, listen. Now, if you want to use this strategy, the first step you want to do is you are making use of your stochastic RSI and your auto Fibonacci on a shorter time frame. And the shorter time frame we are going to be making use of is 15 minutes time frame, which is where we are going to be taking entry from. Now, since 15 minutes is our short time frame, for the short time frame, we are going to be making use of the condition for short time frame using stochastic RSI, which I gave you 3 conditions. But I say using the stochastic RSI, you just need at least one of the conditions, and that condition is that you want to see your RSI between 0 and 20 on the 15 minutes, which happens to be your shorter time frame. Then, but before you go and check all these things on your 15 minutes, you have to first come to your 1 day and check the current candle on the 1 day. You want to make sure that the current candle on the 1 day is a bullish candle. You want to make sure that the current candle on the 1 day is a bullish candle. Now, this is a live trade. I need to backtest this. Now, what I'm saying is because I want you guys to understand, I want to backtest this. So I will come back. Testing simply means coming back to previous things that have happened. So what are the previous things that have happened? What am I looking at? I'm looking at a current candle must be bullish. Now, so I've cited this cake on the 1 day, and I've come to the point where I have a bullish candle showing. So let's say this day was, let's look at the day. This was Saturday, 8th of February 2025, last 2 months. So I will now go to, once I have spotted that bullish candle on the 1 day, then I will move to my 15 minutes. Now, what do I want to do? That candle that you spot, take note, it will definitely show on your 15 minutes, which is showing me here that it is 1 a.m. on the 15 minutes. So we said the crypto market always begins at every 1 a.m. every day. So from the 15 minutes, if you look at all these candles, it is the candles that have formed in that day, Saturday 8, 1 a.m. If I look at the next candle, 1:15 a.m., the next candle is 1:30 a.m. But now, on that day, we slept and woke up 1 a.m. We slept. So from 1 a.m. and woke up by around 6, 7. Let's say we woke up at this point. At this point is 7 a.m. in the morning. We woke up at 7 a.m. in the morning. Okay. Now, you woke up 7 a.m. in the morning on that same Saturday. Please take note of that. The new market open 1 a.m. on that Saturday. 7 a.m. you woke up and you have identified take on the one day bullish, and you want to enter at your compact time zone. We have the London time zone, which is 8 a.m. to 11 a.m. So let's spot 8 a.m. to 11 a.m. We come here. This is 8 a.m. Then we come here. This is 11 a.m. So this is London time zone. This is when the liquidity in the market is high. People from UK are entering into the market. Traders are coming into the market. There's more money into the market, and there's more money taken out of the market. So you want to see how you can enter the market within this time frame. So the next time frame we are going to look is the New York time frame, which is between 1 p.m. So you spot out 1 p.m. 1 p.m. to 4 p.m. So this time frame now is between 1 p.m. to 4 p.m., which is the New York time frame. Traders in New York injecting money into the market, high liquidity, buying and selling is taking place. So you want to take advantage. Now that you are waiting at 7 a.m., that is when you came. You have mapped out everything. Now, the first thing you look at is first on the auto Fibonacci at 7 a.m. What is it? Is it an uptrend or a downtrend? We are seeing a downtrend here. How do we spot downtrend? We said it that you see 0% at the bottom, 0% at the bottom, and 100% at the top. To further confirm, you see a diagonal line projecting from top to bottom. That is how you spot a downtrend. Now, since you now know that it is a downtrend, what is the condition for a downtrend? The condition is that you want to see the current candle on the 0% line within the London compact area or within the New York compact area for a downtrend. It is these two areas we are trading. Anything outside these areas, we are not going to trade. Not trading is also trading. So you don't trade every time. You should have a strategy. You should have a time you trade or you enter into the market. And we are giving you time to enter into the market. This time we feel there's high liquidity in the market. People buy and sell. You can take advantage and come out of the market as fast as possible. So I'm stressing this. London compact area between 8 a.m. to 11 a.m. The New York compact area between 1 p.m. to 4 p.m. Anything outside this compact area, don't trade. Except you want to use your former strategy, you know. So now, 7 a.m. I'm waiting for 8 a.m. I've set everything up. It's a downtrend. I'm expecting my current candle to be a 0% line, to be on the 0% line. But before it gets to this 8 o'clock, anything can happen. It can change to an uptrend. For an uptrend, take note, you want to see 100% at the bottom, 0% at the top. That is an uptrend. And for an uptrend, the condition is that the current candle should be on the 50% line or anywhere below the 50% line. Take note of that. But in as much as the current candle for an uptrend is on 50% line or anywhere below the 50% line, it must also obey. The stochastic RSI must also show you that it's at zero, between 0 and 20 at that point. If the current candle, if it's a downtrend and the current candle is between 0 and is between 0% or anywhere below 0%, it should also fall in line with your RSI to be between 0 and 20. I hope I'm making sense. So what you want to do now is let's backtest. I'm controlling it gradually. So let me reduce the speed. So we are about entering into the combat area. So we have entered into the combat area. Now it's still showing us a downtrend. And we want to see for a downtrend, we want to see the current candle on the 0% line. As long as the RSI is between 0 and 20, that is not yet between 0 and 20, and the current candle is also not close to the 0% line. So you will observe something here. It has switched over. If you look at the trend, we are still on the combat area. If you look at the trend, it has switched over to an uptrend. It has switched over to an uptrend. Now you are seeing 100% at the bottom, 0% at the top. So what you are looking at for now, you are looking at that the current candle should be on the 50% line, which is this line, or anywhere below it. Currently is below the 50% line. But there is something that must align with this. What must align with this is that your RSI must be between 0 and 20. So at this point, your RSI is yet to be between 0 and 20. So you have to wait patiently. Remember, the hardest part in trading is the waiting time to see a setup. That is the hardest part. Once you are able to see a setup and you pick a trigger, that trade will deliver. But are you patient to wait to see that setup you are looking for? So you wait, it's coming down, it has gone up again. Boom. You see, but yet the RSI is yet to touch the 0% line. Is yet to touch the green line, which is at between 0 and 20. But the current candle has already protruded to below the 50% line. So we have to wait to see it. So now we are already on the 4 o'clock time zone now. And yet we saw there is an uptrend. The current candle is meeting up our target for an uptrend. We want to see 50% or anywhere below, but our stochastic RSI is yet to touch it. So we are out of that combat time zone now. So we are on the resting time, which is between 11 a.m. to 1 p.m. So the next time we are going to look for a setup is from 1 p.m. So let's continue. So you see, we have now gotten to the London combat area. On the London combat area, no, New York combat area, which is the 1 p.m., we are still seeing that it's an uptrend. Immediately it got to 1 p.m., we are still seeing that it's an uptrend. Now let's continue. So since it's an uptrend, and you see that the current candle is way below the 50% line. But see what is going to happen now. You see that the trend has changed to a downtrend. Now, at that particular point that it has changed to a downtrend, what are you looking for? Since it's a downtrend, you want to see the current candle on the 0% line or anywhere below the 0% line. in a downtrend. You see? See? We are almost on 4 p.m. and we didn't see setup. So that particular trade has gone. You cannot trade. It has gone beyond that time zone. So it is important for you when you want to place a trade. You can pick 2, 3, or 4 trades. Monitor them, because if you rely on one, you at the end of the day you might not see a setup on that day, on that particular trade. So what it means is you have wasted the whole of 8 a.m. to 11 a.m., then 1 p.m. to 4 p.m. on your chart, and you didn't see a setup. So that is why we advise you, when you want to do this, take at least 2 to 3 trades and monitor this way. So that if you take one and you did not see, it will not be like you have wasted. There's no how you take 3 trades and observe it to see a setup, you will not see a setup on one of it. So if you notice even what we are doing, if you notice, you find out that the way the liquidity between this combat time zone is going, you see the way it is going up and down fast, because there is no money entering and coming out of the market. The market is just responding, it's not slow. So I hope this is clear. I think we should try one more example because of time. Let's try one more example. But the most important thing, are you people getting what I'm saying? That's the most important thing. Someone said my voice is breaking from my side here. I hope there's recorded version. You can watch the recorded version. So if this is clear, if you want one more example, I can go ahead to do one more example before we end the section for the day. Okay, King Samuel said it's clear. King Saturaki Umar said it's clear. King Mohammed said it's clear. Okay, so drop any coin. Let's do it. I don't want to be the one to pick coin. If you want me, among the 25 volatile coins, just drop one. So based on this, you can go and do your own back testing or practice your own until pick a coin myself. Are people still on this chat? Am I talking to myself? Okay. Umar said near. Let's pick near, please, and we'll end the section for today. The most important thing is to understand the basic concept of what we are trying to do here. So for near protocol, now, first thing you want to do is first is to understand the time frame we are working with. We are working with using this strategy 15 minutes and 1 day. Take note. Now 15 minutes is your short entry, is your short entry time frame. Your 1 day is your long entry or confirmation. On the 15 minutes, you want to see on your RSI any 3 of those conditions I listed, but the one you want to see, at least the RSI should be between 0 and 20. That is what you want to see. On the 1 day, what you want to see is you want to make sure, or you ensure, that the current candle on that 1 day is a bullish candle, which is a green candle. Please take note of that. So when I open a chart, the first thing, let's assume you come in the morning, you want to trade. The first thing you want to do is come to your 1 day. On the 1 day, you are not making use of any indicators here. Please take note of that. You are not making use of any of these indicators on your 1 day. All you are interested in, you want to spot out a current candle. So because I'm back testing, I will go back let's use, okay, let's use here. So on the 1 day, I'm going to use this. The current candle is bullish on the 1 day. Now, the next step is to come to the 15 minutes. Okay, on the 1 day is bullish. Go back to the 15 minutes. Use your vertical line. Mark that candle on the 15 minutes. You see, it's Wednesday, August 24th. Then you go to your 15 minutes to go and find that candle. You go back, look at that current candle that you marked on the 15 minutes. So what it tells you is it was at this point that the market for that Wednesday started by 1 a.m. Now, you were sleeping during 1 a.m. and a lot of things have happened, and maybe you woke up by 7:45 or 7:15. Let's put 7:15 around here, or 7:45, okay? I mark it at 7:45. Okay, you woke up at 7:15. Now, you woke up at 7:15 and you rush to do all your setup, you map everything on the 1 day, and this is where you met the activities for that day. Yeah, that is where you met it. So you want to trade on the London combat area and also the New York combat area. The next thing is to spot London combat area is between 8 a.m. So you put your 8 a.m., you spot your 8 a.m. to 11 a.m. Then the next time is 1 p.m., which is your New York, 1 p.m. to 1:30 and 4 p.m. Now, between 11 a.m. and 1 p.m. is your resting time. Take note of that. So now, this is where you woke up, 7:15. That's where you met the chart. Now, the next thing you need to look, your auto Fibonacci, what is it saying? Is it an uptrend or a downtrend? How do you know it's an uptrend? When you have 100% at the bottom, when you have 100% at the bottom, 0% at the top, this is an uptrend, like I said earlier. So we have confirmed that it's an uptrend. So for an uptrend, where do you want to see the current candle? You want to see at this 50% line or anywhere below the 50% line. That is where you want to see it. And if you see it at that point, it means that you also want to see your RSI touching the green line, which is between 0 and 20. So they must match, they must be speaking the same language for you to take trigger. So what are we going to do now? Let's play gradually and see what is going to happen. So we are waiting to see what is going to happen on the combat area. So we just enter the combat area, which is 8 o'clock, and it's still an uptrend. So meaning we are looking at a current candle to be on the 50% line or below. So good. Now, if you are seeing my screen, you will now see that we are seeing an uptrend, 100% at the bottom, 0% at the top, an uptrend. And we are seeing the current candle is below the 50% line currently. Now, where is the 50% line? The 50% line is up here where I'm marking like this. This is the 50% line. But where is the current price? You see, it's a little bit below the 50% line. So at that point, what you are going to do is you consider that as your entering point. This becomes your entry point on this current candle. It becomes your entry point, which is at 4.0. It's 4.019. That is your entering point. So at that point, you see that your RSI is still showing you that it's between 0 and 20, which is a perfect setup. This is a perfect setup. So the next thing you need to do is you tie your price range, you just measure 3%. 3%. Take your 3%, cool 3% from the current price. Look at on top of that, put it here. 3%. This is 3%. So that becomes your exit point. You map out your exit point. So let's see when we entered into this market. Now, when did we enter into this market? I'll map it out with another color. Let's use color. Let's use color. Pink. No, color pink is different. Let's use color black. So we enter this market at that same Wednesday, 21st August 24, 2024, as at 10:15 a.m. So let's see when we are going to come out of this market. So let me play. I'm playing it. I'm not. Let me play because of time. So at this point, you are on a floating profit. So you have entered the resting period. It has switched over to downtrend. You see, you're on a floating profit at this point. There's high liquidity. You see the way the market is moving. You will notice that you are on a floating loss. You will hardly be on a floating loss. It's not like you cannot be, it cannot be that serious. Highest floating loss -2, -3, then to go and sell within that 24 hours. So we went down, hit your price range, and went up immediately again. You see the fine. Let me pause it. You see the way the prices are going up and down. There is a lot of money injected. There's a lot of money taken out of the market within this time zone. You see, there's a lot of money entering. There's a lot of money coming out of the market within this time zone. So with this way, you can come out faster from the market. So when did we come out from the market? So you came out from the market 3 p.m. Came out 3 p.m. before the London New York combat time frame. You even came out before the end of the New York combat time frame. You came out. So that is how to do it. So the only thing here is your robber might not be buying more margin calls. That is why you have to deploy bull tactics in this strategy, because it sells faster and it might not buy more margin calls. So you might be forced to use bull tactics category 1. Let's say it buys your $15, manage to buy your first call, second call, and to go and sell. So from all the illustration we have done, you see that it hardly comes down to buy. But we are not saying it does not come down, but your floating loss, for it not to be buying deep seriously, it means your floating loss is being minimized. So that is why we work every day to see the best strategy that can be suitable for you people to use so that you can come out of trade faster. So if this is clear, please, I need the word clear. if you have gotten value from this section, I need the word value so we can end this section. Mr. Money, as I am talking the write-up, you don't need any write-up. I've said it. The London combat area is between 8 a.m. Write it down there where you are. Write it down, 8 a.m. and 11 a.m. Then for the New York combat area, write it on your book. It's 1 p.m. to 4 p.m. It's normal time, you know. Someone does not need to give you that write-up again. What do you need the write-up for? You go on your chart just the way I've gone to the chart. Locate your 8 a.m. on the 15 minutes to 1 p.m. 11 a.m. on your 15 minutes. Then locate also your indicator. Then Kinguma, you have not set your indicator properly. You need to watch that video on how to set it. So I'll Coach Aminu or Dollar Queen, please, if you can lay hands on how to set up your indicator, that video, please, you can kindly drop it on the road to VCs. Let them go through it and set up their indicator. So is there any question before we end the section? Please, is there any question? And I hope you guys have gotten value from this section. Okay, thank you, King Emmanuel. Dollar Queen, thank you. King Mohammed, thank you. These are the people that got value from the section. I want to believe. So thank you. So it is consistent practicing. Okay, it is consistent practicing. We do this on Friday again. You also try to practice. And for those people who are using free, for those people who are using free trading view, I doubt if you can do back testing because that feature is not allowed. So you can also, if you understand this, you can also use it to try live trades also. Why I didn't do a live trade today is because we are expecting job data and it is against the Rqtmi rules to trade when there is a news. So you can analyze and everything is okay, but the news can just mess up your analysis. Fundamental news which are beyond our control. So having said all this, I believe this was clearly understood. A video will be dropped alongside with this. We are trying to do a video that will better also explains and inform the people alongside with these explanations that I've done. Okay, King Mohammed said he has a question. Dollar Queen, kindly unmute him and let's hear what he has to say.
Good afternoon, sir. Good afternoon, sir.
Good afternoon.
Sir, my question.
Yes, good afternoon.
Thank you, sir. I said this applying this combat zone of London and New York. Can one equally wake up at that 1 o'clock a.m. and apply that of Asian combat zone too? Does that have to have enough liquidity compared to this?
We don't trade the Asian combat area. And also in Asian combat area, what you see more is consolidation in the market, accumulation in the market. So we don't trade Asian combat zone. It's not even about the time that we are sleeping. No, it's not about that time. You can wake up if you are serious with your business, you can wake up by that time. But because what you see more on the Asian combat area is more of accumulation. So that is it. So we have what we call accumulation, manipulation, and distribution. So within the London combat area and the New York combat area, that is where you see more of the manipulation and distribution taking place. So, but in Asia combat area, you see more of manipulation. So, welcome. I hope that is clear.
Okay, thank you.
You're welcome. Is there any more question, please? Okay, in the absence of no question, I believe this section was properly understood. All I need you guys to do is to go and practice on your own. Practice the same makes perfect. You cannot just learn something today and expect to perfect it today. You need consistency and you need to practice it. Skill is very important. Nobody can take the skill away from you. Say no to Ponzi scheme. Say no to people doing things for you free. There's no even free time, there's no free thing. So you need to put in the work, put in a little effort to learn and get results that will pay you. Learn a skill that will pay you for a lifetime. For a lifetime. For a lifetime. And let us stop being lazy. The reason why people do Ponzi scheme and get their finger burned is because they don't want to put in a little work at all. And if you are that type of person, you will always end up being victim of Ponzi scheme. So I encourage you guys to put in the work. You can do it. If I can do it, you can do it. You are not an exception. It's all about your mindset. Please let us change our mindset and focus on learning. It is learning that brings about earning. It is learning that brings about learning. So please, let's learn the skill that will make us to make the money, that will help us to make the money. Thank you, everyone. Thank you for your patience. I really appreciate you being on this call in this time, despite your different activities. We'll do this same time next week. We have section tomorrow. It's going to be testimony time tomorrow, where we have our old timers that will share their testimony and their results so far on Rqtmi. So do have a lovely day. Have a lovely day ahead of you. My best wishes. Thank you, everyone. You're welcome. Thank you.